Hi, I'm Kirill Butler. I'm going into my third year of data science and finance at Curtin University. Today, I'll be presenting a somewhat unorthodox pitch on a stock that I believe has significant upside potential within the prescribed 3-month time frame. So, as we can see, Elon Musk has been calling for increased nickel production to produce nickel cathode batteries, and after realizing the apparent lack of nickel supply, he's decided to try moving to iron cathode batteries. Nevertheless, both nickel and iron cathode batteries require the production of lithium. So either way, it seems Elon is in pretty dire need of both nickel and lithium. Fortunately for Elon, there is a company that specializes in just those metals. So today, ladies and gentlemen, I present to you Independence Group, or IGO. The following slide should hopefully give you an idea as to why I believe IGO will provide superior returns within the next 3 months. So to give a quick business overview, IGO specialize in metals that are strategically aligned to the structural shift to energy storage, specifically, for example, electric vehicles. So they've got operations in gold, as we can see, the Tropicana operations of 290 million here, as well as their Nova operation, $593 million, which is predominantly nickel. And in December last year, they recently signed up to a joint venture with Tianqi Lithium, and that includes lithium processing as well as a mine site south of Perth. So my thesis essentially surrounds the market's overreaction to the drop in the nickel price, as well as the fact that commodities are historically undervalued. Something else that I am almost speculative on is the increasing demand for lithium. So as we can see, predominantly from this slide, little Bollinger Band we've got going on here, the price is quite a way below the moving average for the last 20 days. So at least we'll see some sort of mean reversion, which we can count on. Furthermore, since January 7th, the stock's gone down approximately 1 billion in equity value, quite a significant drop. A lot of institutions believe that commodities are indeed undervalued. In this graph here in green, we can see the Goldman Sachs Commodities Index. In blue, there's the ASX 200 index, and there is quite a significant price gap between the two, which I think IGO and other materials commodities industry players will be able to capitalize on. They can also capitalize on the Bitcoin bubble if gold shoots up with IGO's gold mining, as well as Joe Biden's massive investment in renewable infrastructure. The third essential element of my thesis is the fact that the lithium joint venture is undervalued. My net asset valuation is put IGO at $7.72 compared to $6.36 that traded on Friday, so that's a 21% upside. And I think the market is currently significantly undervaluing the future of the lithium acquisition. So certainly something to keep an eye out for. Some potential catalysts over the 3-month period include major institutional investment. Listening to the podcast of the big banks, hedge funds, they're all getting into commodities and the ESG space. So certainly IGO will be able to capitalize off that. We've also got the election of Joe Biden. He's pretty keen on renewables, as well as, we can potentially count on a big tweet from Elon Musk, cryptocurrency crashes, and specific supply issues. Lithium is quite a challenging mineral to mine, so certainly suppliers can have issues with that regard. A few different risks is the potential for, these specific materials not to be used, as well as some potential issues with COVID-19 and misrepresentation of finances. So thank you very much.